Hello, my name is Thomas Krallo and welcome to my YouTube channel where we talk all things trading, finance and money in general. Now this is part 4 of trading tips for beginners. So if you haven't watched previous 3 parts, I strongly recommend going back and doing that before watching this part because quite a lot of things tie into each other. By the way, follow me on Instagram, that's where I post a lot of interesting things as well. So let's get right into the tips. Tip number 1 of today. Wrong price trade. What to do. So imagine you're trading and there is a strong key market level or any kind of a situation that requires you to trade with, especially with a limit order or a stop order. And the price comes to the price that you would like to either buy or sell, and it slips. So slippage is a common thing in trading, and slippage is when, for example, you want to open a long position in German DAX at 8,500 and it slips to 8,520. So you get a lot worse price that you were looking for. And what should you do in this kind of a situation? So in general, I'm talking about slippage and what should you do if you got a wrong price for your trade. Now, I always advocate for systematic, explainable trading. And when a price slips, then it is already a wrong trade, meaning that you got something that you were not looking for. And a lot of times that also means that you have to increase your stop, because always remember that each stop has to be technical. So it has to be explainable and there must be a reason why the stop is where it is. And oftentimes when the price slips against you, you will have to increase your stop and pull it back to the initial spot where you wanted it to be to begin with. And that is something that I don't like doing. And that's the reason why my tip number 1 today is close these kinds of trades. And the reason for that is because, first of all, the risk will be increased because you'll have to pull down your stop and increase your stop. So risk will be increased, and that is something that you shouldn't be doing in trading, especially day trading carries a lot risk already, and you should not be increasing your risk. And yes, it sometimes is a nasty spot and maybe the market has already moved against you a few points or pips, whatever market you're trading, and you might feel a little bit greedy and you will start hoping. And that's the worst thing that can happen in trading. You must never start to hope for something. And you got a wrong price trade and you're hoping, well, maybe it will recover, maybe it will still work. Don't do that. Once you feel like you are hoping for something, that's it, close the trade, it's over, it's done. Take the minus or a small plus, it does not matter, it's just a broken structure and it's not the model that you're trading. In previous videos we've discussed things like a trading algorithm, and you must be following your precise trading algorithm so that your trading is systematic. And when the price slips and you get a wrong price, just close it and take whatever you can and move on to the next trade, maybe another market, and maybe trade on the next day. But leave hope out of your trading, and when you get a wrong price trade, just close that trade. Tip number 2. Should you be combining technical analysis with the fundamental analysis? For those of you who do not know the difference, let me really quickly explain the difference between the two. Technical analysis is when you're using price levels, indicators, and you're analyzing basically the data on the screen that you're seeing, the technical data. And fundamental analysis is, for example, analyzing the fundamentals of a company. That's what a lot of investment banks and institutional traders, the professional traders so-called, are doing. They're analyzing the fundamental aspects of a company, the spreadsheets and whatever, the huge amount of stuff on a company. And you could also say that news, financial news and political news could also be and are a part of a fundamental analysis. So should you be trading technically and also analyzing the news? For example, keeping news in check and seeing, the general background in the world, what is going on. If you're trading, for example, US stocks, or you're trading German indices, and you want to know what kind of a general economic news are out there and what's going on. Is everything positive? Is it negative? How could it affect your trading? And it is, a really highly debatable question. But in the past 7 years, I have rarely used any news. And yes, there are certain situations when some big news come out, like with the coronavirus right now, when European Central Bank announced that it's going to be fueling the economy with a lot of support cash, so it will be supporting the companies and stuff. And that, of course, affected the markets quite a lot, and there was a lot more positivity, so the market turned more into a positive tendency. So there are quite a few effects, yes, and they might be helpful. However, in the very beginning of your trading career, it may be very, very confusing. A lot of times, and until this day, the reason why I don't really like paying too much attention to news. I still watch news. I have a Bloomberg subscription and that kind of stuff, but I try not to mix fundamentals with technical too much. Because a lot of times I saw that the news are positive, everything is great, and the market is dropping. For example, the indices. And it is just really sometimes unexplainable. And you cannot really tie in those two things together, and it might get really, really complicated. And on the other hand, I saw days when everything was negative, everything was just horrible, the news were horrible, but the indices, the markets, they were climbing. So it made absolutely no sense to me, and that was the day when I wasn't taking signals into climbing, so I was trading more short than long, and I should have traded long. And it can be really frustrating and really complicated. Trading is already complicated, and proper technical trading is not that easy as it might seem, and that's why I recommend, and my tip is to stick with one way of trading. If you want to trade fundamentals, you want to trade news, well, go ahead and do that. If you want to trade just technical, which I recommend, and that's something that I'm teaching my students, at least in the very beginning, trade just technical. And then as you progress, maybe in a year or two, you'll feel like, okay, maybe I understand the news very well, and I could maybe filter out some signals and maybe avoid over trading if I would use news and maybe some other type of fundamental analysis. That's absolutely okay. But my tip is, especially in the very beginning of your trading career, try to focus on technical aspects of trading, so technical analysis. Tip number 3, and that is you must find a good broker. You should research the broker that you're trading through and the product that you're trading. If you would like to trade the CFDs, or maybe you would like to trade futures, options, or maybe you want to trade stocks, or you want to trade Forex, you should research the brokers. I will not be giving any advice on any specific broker. Maybe I'll make a separate video on that, but you must select a good broker. And let me explain why. There are so many fraudulent brokers out there, it's unfreaking believable. Commissions are ridiculous, spreads are just insane, but the most important thing that you must watch out for is the market data. A lot of brokers have, as I call them, in-house market. And an in-house market is when the stuff that you see on your screen is actually not the real market. It is very, very similar to a real market, but in certain places, in certain peaks and certain points, there will be point or pip deviation. So in the real market, for example, Dow Jones Industrial Average is at 27,500, and what you're seeing on your screen is 27,523. So 23-point difference. It's not that very big of a deal until you start trading properly. And when you're trading properly, your trading is very systematic and it's very, very, very precise. And when you're, for example, using key market levels, very, very precisely outlined support and resistance levels and these kinds of things, then 23 points, believe me, are gonna make a tremendous difference. And you must make sure and ask your broker what kind of a market data is it providing. Is it providing real market data? And a lot of them will lie to you and they will say, yeah, it's the real market data, when in reality it's just an in-house market. And you must make sure that you see the real deal, that you see the numbers that institutional traders are seeing. So Wall Street, for example, the traders on Wall Street, you want to see the same numbers, you want to see the same patterns, you want to see the same precisely. They will all look similar, but they must be precisely the same. A lot of brokers, actually, that's a little bit more rare, but some of those fraudulent brokers, even, they know where their clients' stops are, and they would actually extend a candle to actually pull the stops when the real market hasn't moved so much. But they are doing it to collect the stops and make the money, because guess what? When you deposit money into the trading account and you're trading with that money, it's actually not going out into the financial market. It's actually staying, with the broker, and when you lose the money, the broker just keeps it. So the broker takes it from his pocket and puts it into his own pocket. And that, I think, is the first video that I started this YouTube channel with. I discuss precisely these issues. So if you want to learn more on these topics about the brokers and the general fraudulent atmosphere which surrounds trading, and especially day trading, then go back to my first video in my YouTube channel. All right, that's it. These are the 3 tips of today. And once again, wrong price trade. That's it, close it, and don't hope for anything. Leave hope completely out of your trading. Number 2, don't mix fundamentals with technical trading, at least in the very beginning. And number 3, choose a good broker. Research the broker before you even open a trading account. All right, I hope I was able to clear up a few things for you, and if this video was useful for you, please hit the like button. And if you want to learn how to trade, then please visit my website at thomaskrallo.com and check out the programs that I've been working on for quite a long time. And those programs, they are insane. They are actually perhaps the most complete and advanced learning programs when it comes to trading in the world right now. All right, I'll see you in the next videos.